Hey there, traders. I'm back, and man, I've been away for quite a long time, almost a month. I went to Thailand for 2 weeks, and I've just been back, and I've been kind of laying low and not making videos. So apologies for not getting out there more, and hope you're still with me. I can go over my trades. I'm honestly like down right now, based on some of the trades because the market has shot up, and I've got these like. This IWM I've had against my leaps, so I don't want these to actually get assigned instead of like letting me get called away by like a normal covered call. I've got these against my leaps, and I don't want to actually purchase them because I've got 4 contracts, and so I've been rolling, and I'm going to keep them in the money. In other words, the current price was 234.43, and I only rolled this. I rolled this one and down to here. So the price went up to 240 from 234. So I rolled this up from 230 to 235. So I didn't go up and beyond and out of the money because there's more money to be made as far as, well, if you keep them in the money, you get some downside protection. It kind of acts like a put pretty much, where there's intrinsic value and extrinsic value. And intrinsic value is the difference between the current price and the stock price. Then the extrinsic value is the value of the option. That's just the time value. So you can collect the time value, but if the price, if things had gone way up from 234 to 240, it might be likely to go back down. So my bet was that it might go back down, and if it went back down to 235 or below that, I would also collect all of the intrinsic value and get my premium back. But instead it kept going up, and so I've had to buy this back for a lot more. Had to buy this, collect a lot of premium, but I had to buy this one back here, and then I rolled it, collected a lot of premium, had to buy it back here. This is actually buying it back one time, and then I had this another trade, which I don't have on here, but I just bought to close because it started to go up again, and that's okay. And it's kind of misleading, so it shows these big negatives that I'm down minus 38.78 this month. But these are against my leaps, and my leaps, like my IWM leaps, let's see, I got one for 205 and one for 190. If I look at the one for 205, the delta is 91 on this. So if the stock price goes up, I have to buy that back with working capital, but I make it up at like a 90% of that here because this goes up as well. Same with this other one. This delta here is 94. So the value of these, I could sell these options and get that money back, or I could exercise them and buy the stock here at 190. And then if I got called away, I could sell them at what I got here at 220, even though they've gone way up past 240. But they have come back down now, so to 231. So I'm glad I didn't roll up to 240, because then I'd just be out all that money. I would have to buy all that intrinsic value up to 240, and then I would have lost it as it goes back down. So anyways, I'm probably confusing you. I don't know if you know about leaps options. If you want me to make a video on leaps options and more in detail, I can do that. I don't want to get into too much here on this one topic. I've got a few other things to cover. Let's see. It's the end of the week. It's Friday. My Amazon here, I had this call out just on the shares I had, and that was assigned. It's the stock price was 230, and Amazon went up to close out around 232. I think closed at like 1 o'clock today. Let's see, 1 o'clock is my time when the market closes. 231.60, so it got assigned because my strike price was 230. So that's okay. I'm actually piling up cash in my account. I've got this other long-standing TNA. I can't remember when I had this. If I look at TNA, you can see this as assigned September 19th. Price at expiration was 45.19, and there's 5 contracts, and so I'm getting a $21,000 credit. So I've got in my account cash available right now, $36,000, because I let my Robinhoods get assigned last time, and so I took that and I'm going to pile up some cash for now because I'm going to kind of watch the markets topsy-turvy, and it's at all-time highs and likely to go back down. So Not sure. I might want to have some cash available for bargains, but I'll add this Amazon or the TNA 21,000, and then the Amazon was 230, so that's 23,000. I'll be adding to this. So I'm going to have, let's see, I think I'll add, with all the stuff I've got, I want to get like 80,700 back into my account. I added this up earlier, so that'll be good. In my account, it's actually, I'm showing as, things are down right now this month, but my account's at all-time highs because the market's at all-time highs. And this is actually, I had to pull out a couple $1,000s here and there for some expenses, so I've actually been pulling cash out of this account. So I am at all-time highs even with that right now. I actually went up to like as far as 210 sometime today at one point. So that's kind of what's going on. Let's see my other trades. This the TNA was assigned. Let's see, MSFT. I've got a vertical put credit spread on that. Let's take a look at that one. MSFT. I'm trying to get into some spreads more because they require less capital, and you can make a pretty good premium. So the expiration on this is 10/10. I got $100 per contract for credit, so 206. And the strike prices were, the short was 475, so I sold the put there, and bought a put at 465. So it's at a $10 spread, so that would be $1,000 in capital at risk with this, less the premium that I got of 212, so around 800 or 790 bucks of that's my total at risk for this. So I'm playing around with those. There you can get into. I want to get into some bigger stocks like Microsoft, Google, Amazon, and Nvidia, and play some safer bets, not being as any of these leveraged ETFs and things like that. And just I kind of want to take things more conservatively going forward and have safer deltas. And I'll probably make less, but I'll be safer. So I'm just piling up cash right now. It's kind of my strategy. Other trades, this Amazon and call, 200 shares. That's also against my leaps for that. Let's take a look at that. That is in the money, so I would have to roll these if the time comes. But like I said before, Amazon's kind of gone down lately, so that's good. I could buy these back cheaper, and I'll just wait. They don't expire till the 3rd, so that's like 2 weeks from now. Who does this sign? I got this money back for 200 shares. NVDA was assigned, and that was a call. IWM did the buy to close on that one. I did have that one in here. MSFTP, just went over that. Amazon, this one was assigned. This hood, I set this up as a call and did a buy to close because it had did that today. It had lost all its value, so it was pretty much out of the money, and I just bought it back for 608, but I collected 192. And I've got another trade on IWM against my leaps. I collected 608 for that, and my delta was 33, and at the time the price was 243, and my strike price was 247. Let's go look at that. This is due to expire in 1 week from now. I collected average of 152 for 4 contracts, so that's why we get the 608 there. But the price had gone way up. It went up like past 245, I think, earlier, and so that was kind of scaring me. I could see earlier this week it was pretty far, up into the Bollinger Band. So go 1 week. It had gone up beyond the Bollinger Band, so I was pretty sure it was going to not go up to 247, which is way up here, and I could still collect a good amount of premium, but then it did fall, so I'm a little bit safer there. I got 1 more week to wait on this one, but man, IWM has just been going way up, and I've had to roll up my calls against my leaps, which cost me working capital, and just hoping to get that back, like I said before, when the leaps increase in value over time. But they're going to expire in 3 or 4 months, and so I got to start thinking about the theta decay and either rolling those or selling them. So I got about 1 week and a couple more days in this month, hopefully, to make up for this being down and get back to a positive situation. But I'm pretty happy with the way things are going. My leaps are I can probably sell those soon and get some of this money back. But anyways, my trip to Thailand was amazing. I'm seriously considering moving over there. If I can sell my house here, I could probably put all that money in the stock market and move there. And they've got these amazing like luxury condos that are like this one, $500 a month for this. The views are incredible. It's on the beach. There's game rooms. It's modern. There's facial recognition to get into the building, into your room. There's lounge areas. There's gyms. There's multiple pools. A one bedroom is like $500 a month, like the video says here. It's incredible. And then the rest you spend maybe $1,000 a month on entertainment and going out and food. But they're pretty cool. This is a beach town, but there's condos in Bangkok too, in the big city, which is not too far. You could just take you could go on a day trip down to the beach, but you could live in the city too for even cheaper because there's so many more buildings and just modern high-rise condos with infinity pools and gyms and street food outside. It's pretty incredible. So I had a really good time in Thailand, and it's my fantasy to maybe retire there in a year. My kid's going to graduate and be off to college and change things up. Maybe I could put the rest of the money in the stock market and actually just live off my stock market money and have money to put away and have money for taxes and everything. So I guess that's it for my video now, and we will talk to you later. Thanks for watching.